All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another U.S. market open price action analysis session. I want to try something a little unusual today. Okay. So we're going to go over some major markets, but then I want to spend the majority of our time actually looking at the smaller time frame on Bitcoin and see if we can see some intraday setups develop. Okay, I'm not going to actually take any real trades in real time, but basically we're going to look to day trade Forex, Bitcoin. Okay, so we're going to split the session up to see how that goes. Anyway, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, cool. Hey, everyone. Good to see you all. Thanks for joining me. Yesterday I had my webinar, so I was not able to do this stream like right after it. I mean, there were like, besides Bill, there were like 2 people in that webinar. So I wasn't exactly happy about the turnout there, but that's, that wasn't my marketing responsibility. Anyway, I'm not blaming anyone for anything. That's just the way things are. Webinars haven't been very good in my recent ones as far as turnout. Anyway, so let's talk about a couple of things before we get into some of these charts. I sent out a trade on the euro yesterday. I sent out a Bitcoin trade earlier before I put this stream up. We're going to talk about those. Also, really quick, I am sponsored by 8cap. So if you are interested in a Forex and CFD broker, they are based in Australia. They offer 2 types of spread categories, right? They have raw spreads and they have standard spreads. Raw can be good if you trade larger positions. Also, they have a huge variety of instruments that you can trade. This is for non-US residents, okay, or people that are not in a sanctioned country. So keep that in mind. Also, if you open an account with 8cap and you deposit $500 and you trade 1 standard lot, okay, you can get my training program for free. But that's, again, available only to non-US customers. If you go that route, please let me know. All right, second, I do have a training program. It's called 6 Steps to Objective Price Action Analysis. It's the techniques that I use. It's basically a roadmap of 6 techniques that I use to come up with these evaluations and trade ideas. If you're new, it's a good idea, okay? So you can check that out at markpmarkets.com. And if you haven't joined it, join my Discord community, all right? The link is in the descriptive portion here. Just click on show more or whatever. You'll see the link in the descriptive portion of this video. Go to my community. Right now, it's still free, so you can still see the Signal channel and all the premium channels. I'm planning to hide those channels from free members very soon. Once I put the premium, the paywall back on, then there will be a 7-day free trial. Okay, so I am going to have a 7-day free trial, just so you know. But right now, you can just join it and see everything that's going on in the active investor channel, in the Signal channels. I have a student server, which is separate. I have a student section, which is separate, but that's a separate thing. Okay. Anyway, all right. Let's talk about Bitcoin here. We have a lot of things to talk about. I talk too much. So first things first. Now here's what I'm going to do. Since I'm going to spend a good portion of this analysis on the smaller time frame, I'm not going to do the smaller time frames here in the first section. All right, so let's get going. We're going to talk about daily charts here first. So Bitcoin, right? Now look what's going on here. We had this, right? We had the squeeze, right? And my original short idea that I sent out like a week ago got stopped out, okay? Now, by the way, I don't short Bitcoin. I am not short this. And the new signal I put out, again, I forgot to put that I'm not short it. I do not short Bitcoin, okay? But I am sharing, if I see sell signals and whatever, I'm going to share them because people want signals, okay? But they're risky, all right? Now, here's the thing. I put out a signal just about a half hour ago, and it was a limit order, a sell limit order based on this price right here. I put the limit order at 250, all right? That's 249 right there. So the thing is, it was based on what? Can you see what it was based on? My students should be able to see that. You have a failed high resistance. You have a bearish inside bar. It took out the low of the inside bar. That was the sell signal. Now, when I was looking at this thing, price was working its way higher a bit, and I said, okay, I'm not going to put the stop order there, obviously, because the price, when I saw this, Bitcoin was like at 20,150 or whatever it was. So I put the limit order above the market, and Bitcoin worked its way up there, and now this trade is in play. Okay. Now, keep in mind, I put a very tight stop on this thing. All right. Typically, you have to understand Bitcoin, a typical stop on the swing trade time frame is about 2,500 to 3,000 points. If you don't like that idea, don't take swing trades because that's the way this thing moves. Now, I put a 1,500 point stop, which is basically here. It's a lot tighter. Why? Why am I much tighter? Because I'm not going to tolerate any conflicting signal. Okay. Right now, this is a conflicting signal, but it has not closed. So if this closes and it closes like this, you're going to have to get out and take the loss. Okay. Now, keep in mind, the stop is basically 1,500 points, but the idea is to take less than that. The stop, the exit may be at minus 1,000 points. The exit may be minus 500 points. You have to be okay with those scenarios, okay? Because I don't want to get caught in a situation where this thing is just going to squeeze and go all the way up here. There's no reason to lose another 2,000 points, okay? So sometimes you're going to take a couple of trades in a row and they're going to lose. That's the nature of a random game. That's the kind of game we're playing here, okay? Anyone thinks that, oh, I'm going to make trade after trade. I saw this ridiculous advertisement on YouTube, ridiculous. And they were pushing software, of course, that gives signals, right? And they were showing every example they showed. Oh, look, this one made money. Oh, look, this one made money too. Oh, look, this, oh, well, it doesn't make tons and tons of pips, but look, 40 pips here, 50 pips there. Oh, only 10 pips here. Every trade was a winner. That is such a fraud, okay? But they're showing, I'm not going to get into all that, but the point is, don't believe stuff like that, especially if it's an ad, because again, always keep this in mind. If that system was truly that accurate, they would not sell it to you for $150. Okay? They would not sell it. They would trade it for themselves. Or they would sell it to a large hedge fund for a couple of $1 million, not $150 and hope to get a couple of hundred customers. Please process that. Okay? Anyway. So, and I get very emotional about that stuff because it's unbelievable how many people they fool with those fraudulent things. But hey, it's perfectly legal. If they can fool you into giving them your money, no one cares. They'll say, well, you should have done your research. You should have been familiar with the efficient markets hypothesis and that there's no advantage to all this stuff. That's what they'll tell you. They won't mention the efficient markets hypothesis. They won't mention that though. Okay, anyway, so Bitcoin situation. This thing is, so this trade is in play, and what I'm anticipating, what I would like to see is a weak close by the time the stock market closes. Okay, so this thing should turn red and work its way lower. It doesn't mean that that doesn't mean that it will. But that is what the proper behavior should be if bearish momentum is going to continue. All right, let's move along here because I want to spend some time on the smaller time frames. Okay, now we're going to jump over to the bond market. Okay, what's going on here in the bond market? Let's take a look. So bond market, interestingly enough, is starting to turn a little red, right? Ah, okay. But no, well, but there's a rally though. But look, the market's turning. The bull market's begun. No, it has not. Okay, this thing is turning in an area where a turn is reasonably anticipated. That's the proper terminology. Reasonably anticipated. Okay, there it is. So this thing closes like this, takes out this low. We have a new sell signal in the bond market at that point. We don't have it yet, but that's what I'm looking for. This could be the beginning of it. If this rejects, if this basically fakes out and works its way higher, then this is the next area. Those two resistance levels that I just put on this chart basically have to be compromised before we can even begin to think that the bond market or rates are turning. Okay, there's just too many red flags. We're far from a healthy market here. Okay, so if this lower high is established, a lower low is likely and within reason to follow. So keep that in mind. Again, I don't encourage thinking in absolutes, but we have to think in probabilities. Is it likely? Is it reasonable to anticipate a test of low on the bonds over the next few days, perhaps over the next week? Yes, it is reasonable. Okay, that low is within range and we have a potential lower high. That's price structure. And the fundamental environment supports that idea. So probability leans that way. It doesn't mean it will play out. It just means that that is reasonable. Okay, you follow me on that? All right. I don't want people thinking in absolutes. I don't want people, well, he said it was going to go there and it's not going there. That's not what I'm saying. Okay, it's a probability. Always keep that in mind. You have to be open to both sides. You have to have a very open mind. You have to let the market lead. You don't overthink. You don't try to outthink the market. I'm not outthinking the market. I'm just looking at potential levels, potential structures, and I'm assigning a potential scenario. Okay, but every scenario has risk. Okay, hey people, let me say hi to a few people. Got Mustafa. Hey, good to see you. Haven't seen you in a while. Jeff, all right, Stian, okay, and Bill, of course. Not well. Here's what I'm going to do. This session is mostly for analyzing the major markets, so I'm not going to spend much time looking at other charts. That's like for my Monday on when I'm streaming in the afternoon when I do the Q&A. Because in this session, I want to spend a little time. I want to try to see if we can get some day trades off on Bitcoin, if there are any day trade setups. Okay, so anyway, I'm running through some major markets because these are markets that you really need to pay attention to. All right, but I'll see if I can answer that. All right, now, real quick, S&P. All right, so S&P 500. Now, look at this. So this may be why we're seeing this bullish reaction. Is there GDP come out today? I know we had a couple of economic reports this week. I can't remember. I know it was mostly bank stuff between Wednesday and yesterday, but there may have been a GDP report in there. I don't remember. All right, but anyway, let's take a look at this situation because this is the holdup right here. And this is what we may see this is what I mean about the fake out on the short side. Look at this. So if Bitcoin does this, we're going to have to get out, or, I'm going to have to call for an early exit on something like that. Now, here's the thing. This is a bullish inside bar, right? We got the sell signal on the S&P, and what do we get? A bullish inside bar. We should not see that. That's not bearish momentum. So, whatever the holdup is, again, the market just opened 20 minutes ago. So we can't really take this seriously yet. We have to see how it closes. If we get a bearish pin bar by the close of today, that is what we should see when bearish momentum follows through. Now, this market's been ridiculous and in short squeeze mode. If this short squeeze mode wants to continue, we have to get out. Like I'm short the euro, right? We'll talk about that. We'll have to get out because we don't want to get caught in the Santa rally if we're going to have one. Okay, so just something to keep in mind. So sell signals show up all over the place and then there's no follow through. That's why I hesitate to get short too many things, even though we get sell signals across the board. All right, because of this situation. When it's too clear like that, you have to be careful. Anyway, so that's the conflict there. Let's jump over to, let's take a look at NASDAQ really quick. I mean, NASDAQ was the leader in the selling. It took out, look at this sell signal and it's trying to come back. So this one gave the sell signal before anything else. This was very clear yesterday. I was like, oh man, and things aren't selling off. That's strange. I mean, the NASDAQ was like the leader on the weak side and it's trying to turn. So again, keep that in mind. Let's jump over to the dollar index real quick, right? Now, dollar index. Do you guys remember what I've been saying all week about the dollar index? Who can tell me? PCE came out at 8:30. Oh, okay. Oh, that's it? Okay. So maybe that's what's giving the market a little optimism. I don't know. Thanks, Bill, for pointing that out. Usually those type of reports don't carry a lot of weight, but things change. And sometimes, all the market needs is like a little good news and everyone gets excited because keep in mind how it proliferates, right? You have the mainstream news. Oh, look, this economic report came out. Market's bullish, blah, 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 blah. And everyone starts buying, right? They help proliferate the herd mentality. Anyway, do you guys remember what I said about the dollar the other day? Anyone want to chime in on that? I talked about this potential double bottom. Okay, that was on Wednesday's stream, I believe, right? When the dollar looked completely like it was bear market time, right? I was saying we are in double bottom. We're in a double bottom area here, even though there was no double bottom at that time. I said we were basically in a fake out zone. Do we get the fake out? This is the fake out. Okay, that bullish candle, that's the fake out. So people that got short this thing, this is not what you want to see when you get short. This also basically right now basically says that the dollar has a higher low established. We'll see now. This, of course, can turn around and fail and start breaking, which that would be a bearish sign for the dollar. But right now, The dollar is still in bullish mode at this moment, okay? And it took out that previous candle high. So if this momentum continues, all this rally stuff that we're seeing in the S&P and blah, 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 that's nothing but noise. If the dollar starts working its way higher, keep an eye on the dollar, because this dollar is really nothing more than a consolidation right now within a broader bullish trend. Keep an eye on the dollar. Do not become opinionated just because we have a couple of red candles and think that this is bearish. It's not bearish yet. It may be turning bearish, but it's not there yet. Okay, we don't have the evidence. Okay, personal income was up ever so slightly also. Okay, all right, well, whatever. So they're going to make a big deal out of numbers that don't really matter a whole lot. Okay, keep an eye on the bond market. Keep an eye on the dollar. All right, so real quick, we're going to do euro, and then we're going to take a look at some Bitcoin on a smaller time frame. So look at the euro. Now, I sent this trade out yesterday, okay? For those, again, if you're not in the Discord channel, go there, go to the community. You can see the trades. I put them in the Signal channel. You can see all the details. I'm not going to talk about the details here, but I'm going to mention that this was the signal, okay? That was the setup. We have it's failed high, right? In an area where a failed high is likely. Obviously, the ECB came out. They must have said something dovish, okay? I'm sorry, they must have said something, yeah, dovish, because if there's going to be more inflation, that's bad for the euro, right? So whatever they said, I don't know what they said. I don't care what they said. All I know is we got the failed high. It gave that bullish, all that optimism and all that nonsense from the other day, gave it right back in one candle. I like to see that if I'm going short, right? So break of low, that was the sell signal. Okay, that was the confirmation. So we had the setup, we had the confirmation. Now the candle is hesitating a bit. Okay, again, it's Friday. Who knows if this thing will have any range expansion, and especially with a bullish S&P, it may hold this thing up a bit, right? We saw that dollar pulling back ever so slightly, but if that dollar rally continues, this thing is not likely to make that higher high, especially in this location. Does that make sense? So I'm short the euro. This I am short. So hopefully we get some follow through here. I'm looking for a couple hundred pips on that one. Okay. Again, that can play out. That can take a couple of days to play out. I mean, my previous euro short that I had with 160 pip profit, that one took a week. And I had to exit. That was when CPI came out, and I had to exit manually on that one. If I had stayed in that, that would have been a red trade. Okay. Interest rate up 0.75 from ECB. Interest rate up. That's interesting, Stian, because I mean, interest rate going higher means they're hawkish, and the market gave it back. Maybe the euro was expecting an even more aggressive move, a more hawkish move than maybe they were expecting a point, or maybe they were expecting something greater, and that's what the ECB came out with. You have to look at it that way, right? Sometimes good news is not good enough, or bad news wasn't as bad as expected, right? That's a very hard thing to understand because we can't really measure it. We can't really measure that. It's a function of sentiment. So that's where you have to look at like relative behavior. It's very hard. Like it's hard. I can't even explain that. But anyway, okay, so that's the euro. Those are the major markets. Now, so let me take a look at this. Okay, let's take a look. NKLA, so Nikola. All right, let's take a look real quick, and then we're gonna go to Bitcoin on smaller time frames. Okay, so what do we have here? Oh, all right, so this is EV, right? First of all, as we know, Tesla's the leader. Look at this thing. So this thing is just seriously hammered, like the whole sector, right? This sector depends on a lot of borrowing typically. So rising rates are not going to be good for this thing. I mean, this is your weekly chart right here. Look at this. I mean, lower low after lower low after lower low. This thing is certainly not buying it at its highs. But here's the thing, if you're looking for a long on something like this, you should not expect a whole lot. For one, if you're thinking of a swing trade, I mean, you have a weekly bullish pin bar from over the previous week. So a weekly swing trade, you could say, is active, but don't expect much from this, okay? If this thing could make it to this old support level of $4.61, basically, you could round that to 450. That's probably a very optimistic expectation, okay? So keep that in mind. Let's go back to the smaller time frame here. I mean, so it's trying to find a bottom, but just keep in mind, you're in a very unsupportive environment. So if you take that trade and this thing goes right to $2.50, the low is 282. If it goes there, that's a lower low. No reason to be in this thing unless you want to hold it and give it a chance until it goes to zero. I mean, you can try that, but the point is lower highs, lower lows all over the place. This thing is just right at this point likely to make the lower low. We're not in a supportive environment. We need rates to come off and we need rates to stay off. We need a Federal Reserve that becomes dovish, and these things will probably find there'll be more interest in these things. I mean, these things have gotten completely hammered, okay? And a part of that is the environment is not going to be friendly toward these. Keep that in mind. It's not just about the chart. You have to understand your economic environment. That's why I've been so generally bearish on all altcoins, on all these highly speculative stocks, because they don't have much of a chance in this environment. Okay, just keep that in mind. No matter what the chart says, if there's a rally, I'm highly suspect of it, because what's going to keep that rally going? What's going to sustain that rally? Where is that money going to come from? We need cheap money. Okay, we need cheap money that everyone can borrow in big businesses, and then they can do stuff with that money. That money finds its way into average Joe pocket, and then that's when these things start to rally, because all that money, hey, I have all this extra money, I might as well buy stocks with it with my Robinhood account. Okay, that's basically, I'm oversimplifying it and I'm exaggerating, but you understand the idea, right? That's where free money finds itself. That's why, when we had all that stimulus nonsense back in 2020, all that nonsense found its way into the market. Okay, and that's why we had these ridiculous altcoins go from a fraction of a penny to like $10, and that's why we had NFTs. All these people with all this extra money floating around. Let's gamble with it. Okay, so please keep that in mind. That's often what it leads to, a speculative bubble. That's what they call that. Okay, anyway, so we have the opposite of that right now. Fed is taking money out of the market. They're trying to contain inflation. Okay, anyway, so that's that. Jeff, when you're talking about signals and you say take out the low, you mean just the no, it's the higher low of the candle, not that the next has to close. Right. All right. So let me explain that real quick, and let me use an example. I'll use euro because that's a real trade. Okay. So when I talk about taking out a high or low, all right, a high or a low, that's the low. We're talking about the setup candle. Okay. That red candle is the setup candle. So the low or the high, it doesn't matter if it's a tail, it's the low of the candle or the high of the candle. That could be a tail, but it doesn't have to be the tail. You understand? If it takes out the low of the setup candle, we're talking about the current candle taking out that high or low. All right. So if the current candle, which is this candle, takes out that low, the signal is now in effect. Okay. That's confirmation. It's in effect. So the trade is in play. Now, and that's this thing, keep in mind, it could go straight up to the high and take out the high of the candle and take out the stop. It can do that, but the trade is in play. I use stop orders to enter these swing trades. I don't just sit there, oh, it feels good. It feels right. Let me just put my feeling order in the market. No, I use a stop order. I try to minimize my participation as much as possible. Okay, minimize your human nature. We can't get rid of human nature. We're a people, but we can minimize the effects of it. We have to do that in order to win in this game consistently, because human nature is where we're trying to take money. That's where we're trying to take our money from. Okay, traders who make mistakes. That is where the retail trader, that is where your profit comes from. Not from the banker. Everyone thinks, oh, I'm taking money out of the evil banker's pocket. You're not. Okay, so keep that in mind. All right, so let's get into what I really want to talk about today, and that is Bitcoin on a smaller time frame. I got a little time to do this. That's why I want to do this. It's something new. I want to try and see if people like it. If you don't like it, let me know. But you have to experiment with these things. So we're going to go to a 30-minute chart. Okay, on Bitcoin. Now this is Bitcoin on Bitstamp. This is the spot. I'll experiment using, if you're using something like BitMEX or using like a futures contract, the patterns and the candles and everything should be the same. The prices may not exactly be the same. Obviously, if you're using something like a BitMEX or a Binance futures or whatever, you have to pay attention to those prices. Okay, but the patterns and signals are going to come from here. So let's first take a look at this thing and evaluate intraday levels. Now, what I'm about to show you, basically, I've been doing this in recent streams. You can do this for any market as a day trader, and this is what you should do. All right. Now, just talking about the 6 steps that I apply, when it comes to smaller time frames, you certainly don't have to apply all 6 steps. This is really where I abbreviate a lot of things because, again, as a day trader, we're only looking for momentum. So all of this nonsense, oh, have you read the news and blah, 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 nonsense. As a day trader, I'm only interested in momentum. That could be bullish momentum. It could be bearish momentum. It does not matter. I just want to extract a small profit for a small amount of risk. That is it. Small, but I want a big profit. Don't let greed get in the way, okay? People always think with human nature, oh, I want to maximize my blah, 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 right? Forget that idea. Your goal is to make the least amount of money for the least amount of risk. Why the least amount of money? I mean, we all want to make money. Why the least? Because the less you look for, the greater the probability you're going to get that, okay? So, for example, quick example before we start talking about this, if I have a trade, okay, and I'm looking for $3 in that trade, and I'm risking $1, okay, and the trade goes to, I'm looking for $3, I get out at $3, right? Great reward risk, but then the trade runs to $5. I could have made that extra $2, right? But let me tell you what happens, right? That probability of reaching the $3 was much greater than the probability of it reaching $5. There will be many times, I'm going to look for $5 in that trade. What if you were looking for $5 and it goes to $3.50, okay? And then it turns around and it gives it all back. You could have made $3. Instead, you give it all back because you were looking for more. There's a lower chance it's going to get further, okay? You understand? That's the way it is. It's not always like that. It's not like a precise thing. But I'm looking for, I want a higher probability of getting out. When we're talking about day trades, things change really fast. And there's a lot of obvious levels where people start taking action way before you. So keep that in mind. I can't tell you how many times I've been like in a trade and I'm like, okay, I'm only going to look for, 25 cents here. Okay. So I put the target at 25 cents. It goes to 23 cents and it turns right around. It's because everyone else had the same idea and they're getting out earlier. Okay, so you're better off taking that profit at a higher probability. Anyway, all right, so let's talk about Bitcoin. Now, so here's what we're looking at. Bigger picture structure intraday, generally bullish, right? We have higher lows, all this stuff, and then we have this consolidation. Look where it found support, okay? So we have basically this double bottom situation right here, okay, intraday. So now, again, this is not going to mean anything for the bigger picture. So don't be confused. Everything that I talk about here is only intraday. This stuff changes very quickly. Our perspective basically narrows. We're only looking for very small bites. What's a small bite? About 100 points, 150 points. That's about what we're risking as well. Okay. We want to try to do better than 1-to-1 reward risk, but that's the starting point. So now look at this thing. So here we are. We have a level. We have a support level. We have a resistance level right there. That's an old support. It broke. Okay. That is now, and as you can see, price is reacting. Okay. We have some information that we can begin working with here. So we have a support. I have a resistance. If this market reverses back off of this inside bar that we have right now and starts working its way higher, then we will have a broken resistance and a confirmation of bullish intraday momentum. Keep something in mind. This thing tends to follow the stock market and has very similar time patterns. Okay, I'm not going to get into all that detail right there, but just pay attention to what I just said. All right, anyway, so we have right now, we have a bearish inside bar off of a intraday resistance level. Okay, what does that give me an idea to do? Short. Okay, so it's a resistance level and I'm seeing a rejection. Now, this is a 30-minute chart. We have 20 more minutes before this thing closes. I'm not going to sit here for 20 minutes. Okay, so let's take a look here at we're going to go to a 5-minute chart. 5-minute chart. Yes. Okay. Now, here's what's happening on the 5-minute. So these red candles represent that inside bar that we were looking at on the 30-minute chart. Now, this only has 2 minutes before it closes. Okay, this current candle. Can I do anything with this? Well, let's see. That's what I'm looking for. What kind of continuation patterns do we have? Wow, look at this inside bar over here. That was nice. Look at this up. This is not exactly an inside bar up here, but interesting, right? Interesting that it shows up at this location. Okay, so right now, based on this, right, that bigger picture basically gave us a sell idea, but I'm not going to short this. All right, I was hoping that we would see a signal. I'm at 30 minutes right now. I'm going to watch this for maybe a few more minutes. I was hoping to see a signal, but there's, this is going to take 5 minutes just to close. Okay, is this candle just open here? Let me see. What is the time here? Yeah. Oh no, this candle has about 30 seconds. Okay, before this thing closes. There's nothing there. So what am I looking for? What would prompt me to take a trade? Again, your average moron, your average fake guru. Oh, I'm going to short this thing right now. They're reacting. You don't react. Again, just like the swing trades, on the day trades, you want to take yourself out of the equation. So what am I looking for here? Now, the common mistake is you're going to look at this structure and you're going to say, well, this is bullish, so I'm going to look for the higher low. Well, that can be somewhat reasonable intraday, but again, we don't have any signal that supports that either, okay? So we can look at some very minor support levels. There's one right there. That's a minor support. Here's the new candle. So let's see how this candle plays out. What kind of pattern do I get here? I don't know. The market needs to tell me. Now, again, little green, see that little green pop right there? Some people are going to step in early and they're going to be like, it's a long, it's a higher low and blah, blah, blah. This candle just opened. This thing can easily turn red and push the low easily by the time this 5 minutes is up. Okay, by the time the 5-minute candle closes. Let the candle close. Now, there'll be many situations. I've been through this many times where this candle will do this. It'll go all the way up here, and you're watching it, and you're like, it hasn't closed yet. What do I do? What do I do? Should I jump in? There's nothing you can do. I mean, you can take that and take a lot of risk. Okay, see what I mean? Look, turn red. Okay, and again, this can turn green. But my point is this: there will be times when you're waiting for the signal, and it goes. That's what you see, and it closes up here. And then what do? You're like, oh, should I take that? I mean, it's a trade, but it's very aggressive because the next candle may turn right on your face. Okay, so here we go. Wasn't a long. It was not a long yet, right? But we're still in the area. We'll see how this we'll see how this develops. Now, what do I do to get long? What do I do to get short? So again, there's no long idea here at the moment to short this. This thing needs to be at a level where a short is within reason. This is the level up here. Okay. Now maybe it can't work its way up there. So I would be open to this area right here. Okay, if price can retest it and give me a signal. If I don't have either of those scenarios, okay, I don't have price over here at this midpoint, price is sitting at a support, I don't have price at this resistance, then guess what? There's nothing to do, okay? People are overreacting all the time. Oh man, it's a short, I'm gonna short this thing, and they're just reacting to what they see. You cannot react to what you see. What you see, what we're looking at here is old. It's ancient information. But no, this open candle, this is real time. What we see here is ancient in the eyes of the algos and the market makers and everyone else that works on the microstructure level. This is ancient. So I don't react to this. I need to be ahead of this. So you can't take what you see for granted. You have to be ahead of it. So being ahead of it means I anticipate buying activity here, but it's not there. Okay, no problem. I anticipate selling activity here, but it's not there. No problem. I wait until the market aligns with one of those scenarios. Okay, that is how you pull money out of this thing on an intraday basis. And we're talking a 5-minute chart. Now, keep in mind, my initial idea came from the 30-minute. Okay, look at the 30-minute. So this inside bar, keep in mind, it's taking out, look, it's taking out the low of that previous candle. Interesting. That's actually generating a sell signal on the 30-minute. So off of an area where a sell signal is likely. Okay, so does that mean I take action? No, it means I shape my perspective. And now when I go back to my 5-minute, I can say, okay, if this thing is going to break, then, and it never gives me the bounce that I need, right, for a more ideal trade, then I look for continuation patterns. okay? And then maybe I can get something out that way. And it's going to take forever to get something like that. So I'm not going to be able to call that here. Perhaps if I was watching this the entire session, maybe we could have gotten a short off somewhere around here, possibly. I don't know. I mean, again, it's easy to say after the fact, and I'm not going to say it after the fact. Okay, so I'm going to leave you with that. Let me ask you guys a question. Do you guys like this type of price action analysis, or do you prefer me just to stick to the bigger picture? Do you want me to work? Because I was thinking, maybe what I can do is I can take some time and just really evaluate it from the day trade time frame. And if a trade idea develops, we can take the trade. Okay, and I'm going to have to do that on paper. I'm not going to do that for real. I just want you to know. Okay, but we could take the trade idea and see how it plays out. Okay, whether it's a long, whether it's a short. Do you like that idea? Okay, cool. Anyone else want to say anything? Because again, I want to put out content that has value to you guys, and I'm thinking, oh, maybe we can spot like a real day trade and see. And if you take that for real, hey, that's up to you. But understand, I'm going to lay out all the risk and what can go wrong, and you may generate a loss as a result. Okay, but you'll see the thought process that goes into this, and how the thought process has to constantly change with the market. All right, and not reacting to things. Okay, so cool. I see a couple of good responses there, a couple of positive responses. Okay, cool. All right, so that's I'm going to experiment with that more, as I continue with these streams. All right, people are not patient. They want fast action. Swing trade requires patience. True, a lot of patience. In fact, you know what? Bill brings up something interesting. In fact, Bill, I have to show that. Okay, so Bill says people are not patient. They want fast action, right? Swing trade requires patience. Patience is actually the key behavior in this game. If you want to call anything a skill, I always talk about this as this is not a skill-based game. It's a game of chance. Patience is the skill, okay? And no one wants to hear that. Like Bill said, everyone wants action. So, and that's why they overreact. You cannot do that. Like this candle keeps changing, right? On this, look, this candle on Bitcoin here. I mean, if we go back to that 30-minute, it keeps changing. So if you overreact, all you're doing is setting yourself up for problems. I mean, 1 minute, look, it looked like it was taking out the low, and now it's kind of coming off of that. If we look at this on the smaller time frame, now look, what is that? What is that? Oh, look, there's a signal right there. How much time we got? Let's see. I'm going to leave it with, let's see where this goes. Okay. The 20,000, what was that? 412 is the high. Right now we're at 415. Okay. So there's the long 415. Stop would go here. And you're looking to target this area here. Okay. What is that? So I laid all of this out before you actually take the trade. What is this? 20,533. So you're looking about for 125 points, maybe. That's all you're looking for. Okay. And if this thing can follow through, then you have your 125 points. What is the risk? The risk is 340, right? So you're looking at about, you can round that to 100 points. You want to round that to like maybe 80 points. That's a little better than 1-to-1 reward risk. That's it. Okay. So this thing is now in play. So you guys can watch this. I'm not going to sit here and watch this. Well, we can watch it for like maybe another minute, but this is it. I mean, what is this? Bullish pin bar. Okay, so now anyone that was excited about shorting, like I said, it's a short, blah, 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 right? It reversed right in their face. This line, as you saw, I put this line on the chart before this signal developed. Do I have some kind of magical thing that pointed that out? No, I know how to read the price structure. Okay, so that line was there. It was a place to anticipate this type of behavior. There it is. Now we see if it follows through or not. Just because it sets up and goes doesn't mean it won't. Doesn't mean it will follow through. You have to keep that open mind. Okay, but this is what I wanted to show. I wanted to show a day trade develop. So I mean, we're not going to sit here for the whole thing, but you guys are going to have to watch that. But this would be the target area intraday, right? Now, if a conflicting signal shows up over here somewhere and you get like a bearish pin bar, you get out. So if you don't have 100 points, or if by that point you're only up like 50 points, it doesn't matter. You're up. If you want to be more aggressive with it, you put your stop to break even. There's a good chance it's going to go to your stop and break you even. Okay, see how it's turning? So, again, you have to constantly be on top of that. Things change. You cannot think in absolutes. You cannot have opinions. This still may be a bearish market today if this thing can't follow through. Look how quickly it gives it back. Okay, so here we are. This trade went from somewhat green to now red. Look at that as I'm talking about this. Okay, what time is it? We have 1 minute. We have 1 minute for this candle to close. Okay, so this candle, if this candle closes like this, a bearish pin bar, and takes out the low, that's a conflicting signal after a bullish pin bar. You have to get out. You have to take the loss. You can't, well, I'll give it a chance. No, you don't give it a chance. This thing can break and break hard, right? What you can do is get back in. That's part of, when you put on these trades on this time frame, that's part of the deal. You're going to have multiple trades because it's about cutting that risk as quickly as possible. If the market faked you out, you just get back in. All right. You have to have some control though, because you don't want to do that 100 times. Okay. All right. So anyway, so that was a good, I think, interesting lesson. You got to see a lot of changes right there in a very short period of time. You can imagine what this is like when you're looking at this for hours, or if you're looking at other markets like the S&P or NASDAQ. Okay. It's easy to start mixing time frames, right? You can't do that, okay? And one thing is you can't turn a day trade. You go, oh, well, you know what? I'm going to make this a swing trade now because it's pulling back, and you can't do that because now you go from minimized risk to big risk, right? And that's where you get into problems and wipe out half your account. Anyway, I'm not going to sit here. I could talk about that all day. All right, you guys. So I'm going to leave you with that. I love you covering wall. Okay? It helps me better understand the overall. Cool. Well, yeah. So, and what I'm showing you has taken me many years to figure out. Okay, many, many years. I'm giving you a lot of value here, and no one cares. I mean, you guys care, but like all these fake gurus have like thousands of followers. I only have like a few, because no one appreciates reality except you guys. Anyway, so I'm going to leave you guys with that. Again, listen, if you're not in my Discord community, join it. That's where I'm putting signals. I have a lot of plans to really improve the experience in that community. Right now it's free, okay? But I'm going to put a paywall up. And I plan to evolve the community further. It's not just going to be, a couple of signals and blah, blah, blah. Okay, I have a lot of plans, and, I appreciate anyone that supports me along the way, so that I can put a community together that actually offers real actionable value. Okay. Anyway, and check out my training program if you want to know more. Now, my training program focuses on swing trades and basically structures your thought process around the swing trade idea. You have to start there. That's the best place to start. I show day trade here. Everyone thinks like that's where they start because, I'm going to make money. Please, day trade. This is like competing in the NFL. Okay. And you're like a Pee-wee League football player. And you know the rules of the game, you know how to score points, right? You know how the game is played, but you think you're going to play in the NFL, all right, as a Pee-wee League? Oh, that's funny. That's not rational. But that's what these people that jump into day trades thinking that that's what you're playing in. You're playing in the NFL and you're a Pee-wee League football player. Okay. Start with the bigger picture. Start with swing trades. You can get my training program at markpmarkets.com. And there's a lot of value in that. I'm doing private student meetings. I had one the other day. Stian was there. And that's where I can answer your questions and stuff like that. But it's a video training program. Okay. So you take it at your own pace. It's spread out over 15 days. It's at markpmarkets.com. Check that out. Most people also want a guru to tell them what to do. You teach people. Right. Well, if you have to depend on someone, that's a really bad situation to be in. You don't want to be dependent. I give people the idea so that they can basically protect themselves and take a lot less would-be stop-outs. I mean, that's really the true value of what I provide. And people don't want to hear about that. They want to hear about, I'm going to make millions of dollars by next month. That's what they want to hear. And that's an outright dream and fraud. Okay. No one makes money in this game. Most people don't make money. And all these fakes on TikTok and on YouTube, they don't make money either. They actually, there's many ways to fake Forex accounts, right? There's ways to fake P&Ls. There's ways to fake brokerage statements, okay? So all this proof that they provide is most likely fake. All right, anyway. Right, Bill, okay. And yeah, Stian, right. The training was very private. In fact, Stian owes me $300 now. I'm joking. I'm joking. All right, you guys, I got to turn this off. See, I keep talking. I said I was going to turn this off 10 minutes ago, and I keep talking. I got to turn this thing off. All right, you guys. So again, thanks for watching. Enjoy the rest of your day, and hope to see you in the chat. And I'll see you, on Monday. So enjoy the rest of your day, the rest of your evening. And thanks for watching.